Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
Well, we've got a caller, Stan. Didn't want to be on the air, but he had a question. Is there a way to protect my income from being overtaxed by the government? He said that Stan says he's in an upper tax bracket and wanted to protect his income from overtaxation. Well, this is a great question. We're going to get to that in just a second, Stan. So stay on the line or on the air and listen for that, because understanding taxes in retirement is so important. A lot of people have referred to retirement and the taxes in retirement as the ticking time bomb, because there's this magic age that when you reach it, Uncle Sam is going to tell you to basically force you to take withdrawals from your retirement accounts, whether you need to or not. And this can create unintended consequences for taxes, and also whether or not your Social Security income is taxed, whether or not you get bumped up into a higher Medicare premium bracket. A lot of people get surprised by that. You got to make sure you're managing those taxes in retirement and before retirement. One of the best things that you can do, Stan, to minimize those future taxes is to make those contributions to your Roth IRAs or Roth 401ks. Some people, especially right now, some people are considering also conversions of to their traditional IRAs over to Roth IRAs. Because the market's down, their account values are a little bit lower, and they're thinking this is a good time to do it. You want to be careful about that, because when you do convert some or all of those traditional IRAs to Roth IRAs, you will be taxed on that situation. Some people will set up because their income is higher. Maybe consider what we call a backdoor Roth IRA. There's a very specific way to do. Stan, I will not get into the details on the air about that. But if you have a question, just schedule a quick phone call on our website at spendlifewell.com. I think we can help walk you through that. But when you get up there, you can't contribute to the Roth anymore. There's a lot of different things you have to consider. Those are very specific to higher income earners. And you want to be talking to a financial advisor about things that you can do with that. But minimizing that future tax liability, Stan, is so important. A couple of things I just mentioned there. You can also use different types of vehicles that can help minimize or postpone taxes for a little bit longer, using certain types of tax qualified type vehicles that are not retirement plans. We'd be happy to talk to you about those things, but they get a little bit more intricate in detail, and I don't necessarily want to try to dive into that on the air today. We'd have a lot of people, you and I would be able to have a conversation, but we might have a lot of people that might fall asleep because it is a little bit technical with that. But I'm glad you asked the question, Stan, because understanding taxes in retirement is one of the most overlooked things that people don't realize. You're still going to owe taxes in retirement. Even if you're only receiving Social Security as a couple, if that Social Security is more than a certain threshold, say $34,000 of provisional income, then you're going to pay some income tax on your Social Security benefits. Now, the good news is that relatively speaking, Social Security is a tax-free, or not tax-free. It's not 100% tax. It is at least 15% of it is tax-free. The remaining 85%, depending on your income levels in retirement, could be subject to ordinary income tax. But the level of that depends on what other sources of income that you have coming in. Social Security calls it provisional income, and it really includes one half of your Social Security income. It can include any type of IRA withdrawals that you pay income tax on, any other taxable interest that you earn through savings and other types of vehicles, capital gains, et cetera. All these things fall into this provisional income. So you have to be aware that we have tools in our office to help us forecast that. And a lot of times, especially with those Roth conversions, Stan, you have to be careful. We have a special program that we're able to put in your tax return for last year, 2021. We can model some scenarios for 2022 and then tell you what's the threshold, what's the limit that you can maybe convert over to a Roth. But there are a lot of ways that you can minimize your future tax liability as you prepare to go into retirement. But I think it's so important that people do that, people consider that, because that will be one of the things that could really ruin retirement when you're having to pay so much in taxes and you force all sorts of bad consequences for Medicare Part B premiums. We saw someone that did not plan. They came to us after the fact, and they had a lot of real estate that they've been selling as part of their portfolio, and they were taking a lot of taxable gains on that. And it pushed them up to the level where their monthly premiums for Medicare Part B, and this is per person, not per couple, it's per person, were well over $450 a month. That's Medicare Part B. And that also applies to Medicare Part D, which is prescription drugs. So, Stan, I encourage you to talk to your financial advisor if you don't have one or just want a second opinion. You can give us a shout. Just go to our website, spendlifewell.com, click on the complimentary consultation. And when you do, you'll be able to schedule a 30-minute phone call. We'll just talk for a little bit, see if we can walk you through that. There's nothing, those are complimentary. But when you do put those notes in there, give us a note, say, hey, I called in the show about taxes, and we'll remember who you are and answer your question.